Well, hey, everybody. It's SmallCapSteve Live. I'm SmallCapSteve. We've got a big day in the markets. Everything's seemingly just getting shut right down. Not a whole lot of news in the small cap world today. Our old pals there at Fsd Pharma, huge. They just got their president fired by a certain group of shareholders. Great Bear announced 97% gold recovery. GameStop. We're going to be talking about GameStop today. Can't stop talking about GameStop. What else? The other big news going on. Not that I can see off the top of my head. We're going to be joined by Curt Marvis from Q Media, microcap that's been around for 3 years, finally starting to get some traction, showing some movement there in India. Looking forward to talking to Curt. He's actually a really entertaining guy, one of the original guys at MTV. So I kind of want to get into all that stuff, hear some of his war stories from those days. So buckle up. We're about to get started. Let's hit it, baby. Joining me today, as always, is trusty sidekick, Jay Lutz. Jay, how you doing?
Oh, I'm doing all right. It's been an interesting 48 hours on the markets, that's for sure. But small caps is it's not dead, but it's awfully quiet the last couple days with the events.
We've had a pretty good year. You know, it's going to take more than one blow to knock us down. I wouldn't say small caps are dead today. But I think what's most fascinating right now is a lot of the short funds. And look, this might be a scary thing for us Canucks here, us Canadian folks, is that a lot of these short squeezes are happening on, U.S. listed NASDAQ and NYSE companies where Robinhooders have access to options. Now, that's obviously not the case in Canada with all these little micro caps where we've seen short funds come in and dummy companies that are trying that obviously need to raise money. So they know that, if they pound the stock hard enough, they can turn around and say, let's do a private placement. And there's often like share loan agreements that aren't even disclosed to shareholders. So, but it does feel like the short funds are out of the Canadian small caps for now, because we've just seen like action that we typically wouldn't see where a stock just rips from like 25 cents to 40 cents on thin air. And, over the last couple of years, if we ever saw that kind of buying kick in, there'd be somebody there just to whack it. And that doesn't seem to be happening. It's like we have like a real auction market going on where people who actually own the stock are selling it and people who are buying the stock are real buyers, creating a real price equilibrium that, makes it a lot easier to follow the level two and makes it, make more sense. But people don't want to talk about small caps. They don't want to talk about micro caps. What do they want to talk about, Jason?
They want to talk about GME and AMC too, I guess, because AMC has been doing pretty well the same thing as GME. AMC is that AMC Theaters? I can't.
Yeah, it is AMC Theaters.
So effectively it's the same thing. Large short interest following the pandemic, similar to GameStop, because fundamentally the businesses in their current state don't exactly work. But
here's a very basic breakdown for those of you that are kind of new to this. I tried to break it down into some really simple bullet points. So, and this could apply to AMC as well. Right? You've got a company that makes no sense. It makes a whole lot of sense to be shorting it because the company is effectively fucked because of COVID, right? They require on foot traffic, people being next to each other in order for their businesses to succeed. So the short funds, they all hop in, right? Makes sense. What that does is that makes it so that a large percentage of the float is in fact short. Then some clever folks on Wall Street Bets post about it. And they say, look, if we start buying call options that are, soon to expire, but, drive up the delta, that means that whoever's writing these calls has to hedge. So they're going to have to go into the underlying security, whether that's AMC or GME or BlackBerry or whichever one it is, and they're going to have to buy the actual stock. Simple supply and demand. The more you buy, the higher the price goes. So that's really what's happening here, is that the float ends up, being largely, pushed around by the shorts, and then the calls come in and they smack it. The shorts are forced to cover, and it creates this sort of feedback loop where, and a whole part of this equation that I never wrote about is a ticker symbol I like to call FOMO, FOMO, which makes it so that people who are looking at these stocks run go, shit, everybody around me is getting rich. Everybody's talking about it on Reddit. They're talking about it on Twitter. They're talking about it on Facebook. I'm getting calls, right? Me, SmallCapSteve, I'm getting calls from people who normally don't give a shit about stocks, right? My buddy Kyle, who's a plumber, is texting me constantly. He's like, oh, me and my brother, we bought a bunch of GameStop. The fuck do you buy that for? It's effectively a bankrupt company. But they're hearing about it on Reddit. They're hearing about it on Facebook. They're hearing about it on Twitter. They're hearing about it on the news. They're hearing about it in their chat groups with their friends. And it's created a whole frenzy of retail investors that didn't even know that GameStop, was a stock. I mean, most of the people who I know, they're Canadians buying it. They're like, we don't have GameStop here in Canada, I don't think. I don't know, maybe we do.
I think we got EB Games.
Yeah, so I've never seen one. But here we got a flurry of Canadians looking to buy the stock, and that's because of FOMO, fear of missing out. And that is a part of the equation that's existed since the history of auction markets, dating back to tulip mania, right? As things start to go up, people look around, they go, my friends are getting rich off this, other people are getting rich off this, I ought to be getting rich off of this. So what do? They go and they buy something that they probably shouldn't be buying. And it creates that feedback loop.
And I think, I'm not sure it's the best part or the worst part, because this part actually drives me batshit insane. But I mean, we all know this morning that a number of brokerage houses were just out of commission. Robinhood, TD, Interactive Brokers, they were all having major issues. All these brokerage houses that are predominantly retail investor based. Coincidentally, they all seem to go down around the same time, whether it's from excess volume and servers not being able to handle capacity or what have you. But now TD Bank specifically, I think you've got the tweet there, has actually limited trading in, I think it's certain instruments of GME and AMC, which I have such a major issue with, because that's not free markets. I mean, should some of these people be buying securities? No, but that's not how free markets ought to work.
There's a tweet here that you wanted me to put up. Our buddy Bruiser sent it to us beforehand. Here we go. The machine moves in to choke off the little guy and to protect the whales from losses created by their company killing shorts. System is rigged all around.
Do you have the screenshot of? Should have been in there, unless you got a different link there.
You told me to grab a link. Is this not the one? Why don't you do a screen share there?
Let me find it first before I make a fool of myself.
Well, let me read through this thread, because I think that this is great. Here we go. The machine moves in to choke off the little guy and protect the whales from losses created by their company killing shorts. System is rigged all around. If the NASDAQ is true, it can cause retail investors to dump some shares, which will lead to price drops and help the big buys who have shorts all around. Market manipulation that the SEC should look at, but bigger chance the feds will choke off the Reddit brigade.
If you scroll down, the screenshot is actually there at the end of the thread.
Okay.
Right there. Click that and open it up. So TD Ameritrade is actually mitigating their own risk and saying, no, you guys can't invest in GME or AMC. Feel free to invest elsewhere, but we don't want you investing here, so you can't. And to me, this is manipulation. Whether or not others view it that way, but they're effectively manipulating the market by saying you can't buy these for no specific reason other than we think it's a bit too risky, so you're not allowed to, despite what your margin or any of your accountabilities may be.
Mm-hmm.
Right? Out of an abundance of caution. I mean, TD is never there to look out for me. When the market goes down and I'm in a position, when their systems go down and I'm in a position and I lose thousands of dollars, what do? Oh, here's a couple free trades. They don't care about me. Don't try and act like you're acting out of abundance of caution. You're here to protect who you're here to protect, right?
Yep. This is it, Reddit. This is it. They're coming after you. They're coming after you.
Yeah, and I mean, like the market commentators in general on this whole thing, everyone's going, "Oh, this is bad for markets." I'm like, I kind of bought it at first, but these people, they made how many billions of dollars throughout the pandemic while everyone else was struggling, and now they're being taken out by a collective use of a couple hundred stimulus checks for $1,200, and it's screwing with the markets. And at this point, I just find it hilarious. Because, I mean, it's not really the shorts it's getting, it's the hedge funds. And the hedge funds are the ones that...
Well, you know what? This is where I don't like short funds, okay? I like short funds when they expose frauds, when there's a bunch of bullshit going on, and they're going to do the job that the SEC doesn't want to fucking do, and they want to go after it. Like my buddy Maj there over at Geo, and when they used to hit those China shorts, watch the China Hustle on Netflix, check it out. That makes sense, right? Like that's saying... This is bullshit. Let's call it out. And Nate over at Hindenburg does a fantastic fucking job. Like, I know that all the Afria fanboys are going to come at me for this, but fuck that. Andy sold a shed full of rat shit for over $100 million to Afria and made a lot of fucking dough doing it. Good on him. He figured it out, but that bullshit needs to get called out. Now, here's the thing: is what we got a company that's on life support that's ready to just they're struggling to get through the pandemic, and now we have these people who are selling the stock to try to force the company down prematurely. To me, that's a little bit fucky, and I think that this is a case where if you've got problems with shorts, I'll tell you, I think that this is a case where it's okay to say fuck that. Citron, all these other companies that were trying to step on the throat of a company that was already struggling to breathe, but still, like these are real businesses. GameStop, AMC, these are real businesses. They're struggling as a result of the pandemic. Why do we need that added pressure from people who are trying to, grab a little bit of percentage points off of, the company, drowning? Like it's very different. Like that's how I feel about it. Is I say, if you shorted these things and the Redditors took you down, sorry.
Yeah, that's exactly my stance. I mean, government isn't here to bail out someone that loses $100,000 on a company going tits up, but they're here to save someone that loses $2.7 billion from the exact same thing. Fuck off, right? Like,
yeah. I agree. Look, man, we're on the exact same.
I have such an issue with crony capitalism, right? That's what it comes down to.
Yeah, I stand with Wall Street Bets on this. I think that it's great, and if you want to call it market, and look, there's going to be a lot of people calling this market manipulation, but if buying a stock makes it go up, or buying the call options make it go up, I don't know what to tell you.
Here's
market manipulation.
How is it manipulation when a collective of small traders do it versus when a collective of large traders do it, call themselves a hedge fund? They're doing the same thing on the other side.
It's technically illegal to be talking with other traders about trades as you're executing them, and that gets people nailed. Like if you're working at a big shop and they can nail you for that, right? So we're actively seeing that happen on Reddit, but and this is where everything with capital markets gets really, really blurry. It gets, how.
Steve's at a loss for words. This is
it's frustrating because social media is always going to be there, right? It's always going to be there, and people are always going to communicate. So how do you regulate it? Like how do you like what are you going to People can use anon accounts. They could use VoIPs, not VoIPs. What are they called? What's the word I'm looking for? Yeah, VPNs. So you can block your IP. This is just like when people get upset about anon Twitter accounts saying shit on capital markets. It's like, guess what, guys? This is just how the game's played. There's nothing we could do to stop it. So we just have to accept that that's part of the markets. People on social media showing up with Zach Morris accounts and random accounts and like paying for fucking India for a bunch of likes and fucking retweets. That's just part of the fucking game.
Yeah, and I mean, I'll add to it. This morning, I'm just reading it from Twitter here. Nasdaq's Adina Friedman says that they monitor social media chatter and will halt stock if we match chatter with unusual activity in stocks. And so that I give a resounding fuck off yet again.
It's like people are talking about the stock too much. Let's halt it.
Yeah, don't tell me that it's not going to be a game of pick and choose. You think they're going to halt Tesla from too much chatter? No, but they're going to halt GME because there's too much chatter? What's the difference? Because you're friends with one guy and not the other? It's so arbitrary that it destroys markets as a whole.
Yeah,
right.
It's you ask me, it's pretty. They're what's it? They're trying to what's the saying? They're trying to drink and spit at the same time. I'm not good with sayings. I usually get them wrong and then create a new one as people make fun of me. But they're trying to suck and blow. That's it. They're trying to suck and blow. And you cannot regulate this. You cannot regulate social media. You cannot regulate social media. So all you're doing now is you're just going to arbitrarily cause shit, and you're guilty of it, right? Like if you go after GameStop now and you're the NASDAQ and you say, oh, there's too much chatter on social media. Well, where do you draw the line after that? Because there's always going to be chatter on social media and you don't know where it's coming from. Jay doesn't know where it's coming from. You can hire, there's software out there that tracks this stuff. I've seen it. Datametrics has built one that has millions of dollars in contracts that look at where things are coming from. And it's not that good. It's fine if you're looking for sort of a macro look, but are you going to create a threshold? Like X amount of tweets, X amount of Facebook likes, X amount of Facebook comments, X amount of Twitter, what do they call it? Upvotes, they call it, Reddit upvotes, retweets, all that stuff. You're just going to create that arbitrarily? Like, oh, everybody just stop retweeting. Everybody stop tweeting. The stock's going up too much. Stop it. Stop it. Stop it. Like, fuck off. Sick of this shit. Retail investors finally find a way to work the system to their advantage and work together, and they're just instantly like, no, we're going to stop to this. Hedge funds win again. Let's just have the fucking Fed, get Jay Powell, go create a new facility, put it into fucking BlackRock, and then bail out fucking Citadel. Let's just do it, guys. Let's go. Fuck off. Sick of this shit. All it is, a capital class versus the labor class. They gave them a check. They gave them $1,400 in the mail. They found a way to make it work for them. And now they're telling them, fuck you. Welcome to what millennials experience every fucking day. Everybody I know in the GTA, they went to school. They worked their butts off. They got a good job. They can't afford a house now. Just watch real estate keep falling further and further out of reach. Print more money, lower interest rates. Well, everybody who's got these fixed wage income jobs, that's not helping them. They got close to getting a down payment. They can't get in now. Same thing's happening. That's how this whole thing works. It's those with the money make the rules. You found a way to make money and fuck with those people? Nah, we're going to put a stop to that. We're going to put a stop to that. Well, congratulations, guys. You won, and they're working right now to take it away from you. And that's life, right?
Yeah, I wonder about is TD letting people get out of these call contracts or not? Because if they are not, and effectively my paper 19 million goes to $0, you can guarantee there's going to be lawsuits, and there's no way they can't pay up at that point, right? Like that is blatant market manipulation and theft, effectively. Sure, it's paper gains, but if you as a brokerage are not letting me sell it because you have deemed it too high risk, you're saying it's too risky for me to take my winnings and leave.
Mm-hmm.
Right? So I don't know how that's going to work, but I imagine that there's going to be legal ramifications, and this will go on for a very long time.
You want to know how to me it's pretty obvious how this whole thing's going to play out. I'll tell you right now how this whole thing plays out. This is going to be really simple, guys. Get ready for this. They're going to shut down Robinhood, or they're going to make it so that people can't play the options market on Robinhood. It's going to be one of those two things is going to happen. Get ready for it, because they don't want you getting ahead. When you make money, they lose money.
So the interesting thing that should be pointed out here, and we haven't really talked about it previously, is Robinhood does free trades for investors, but like anything in life, nothing's actually free. So what they're doing is they're selling in advance, just a few microseconds, but it's enough for these algorithms to react. They're selling the order flow book to Citadel, who coincidentally is also the same person that sold out Melvin Capital. Or sorry, that loaned 2.72 Melvin in connection with 0.72. So, I mean, there's definitely funds that are making money, especially someone like Citadel. But absolutely, I was thinking the same exact thing this morning. Robinhood right now, those execs are probably getting reamed out by every top-level official possible for allowing all these retail investors to trade options. And they'll get shut down on the basis of they weren't doing enough due diligence into experience for trading these financial instruments or some shit like that, because it is playing with the social structure of the world and they don't like it, is really what it comes down to. That might sound overly large and conspiracy-based, but to me, there's no conspiracy. I mean, those who have money will look to keep their money. That's just how it works. And Robinhood right now, this guy in particular, is probably getting reamed so heavily that he is in hiding. Like, I can't imagine
he was on CNBC this morning, and he talked about his whole motivation starting Robinhood. And you know, I have the benefit. I talk to a lot of millennials and get to hear their thoughts on these things. And like, it's so challenging to figure out how to even just buy stock when you're a young person. It's so challenging because you go down to the bank and you say, I want to open up an online account. What do they say? A self-directed account? You want to trade your own stocks? You little peasant? You don't know what you're doing. What? Are you crazy? You're just going to buy stock without understanding what you're doing? Are you nuts? No. Buy one of our mutual funds. You got to buy one of our financial products, right? That's what you got to do. So I watched this video here this morning with the founder of CNBC, Vlad Tenev.
Sorry, founder of Robinhood, not CNBC.
Sorry. Of Robinhood. and it's interesting because what he said is in his home, which is Bulgaria, nobody owns stock. He goes, there's two places you put your money. You put it in the bank or you put it under your mattress, right? And the idea of owning a stock to many people from his country is like the idea of owning a house. It's a dream. And all he wanted to do was make it easier for people to get to participate in this dream. And it's like he was successful at it, right? Like he made it so that millennials had access to all these things that banks made it challenging for them to own because, of course, they make more money selling you their financial products. They don't explain to you how any of that works, right? Like there's no explanation of, management fees, performance, how they do versus like they don't want to educate you on any of that shit. They just want you to buy the financial products so that they can take a spread off of you, right? So here he comes up with a system that allows the consumer to to direct. In case you're not paying attention, guys, for us millennials, and I'm just barely a millennial, and by some definitions, I'm probably not even one. But it's all about self-directed transactions, right? Whether I'm looking at Uber or I'm looking at Amazon, I want to direct the transaction from start to finish. I don't want to have people trying to sell me shit. I want it to be easy. And that's what Robinhood did, was they created this app that made it so that you could just trade these things. Sign in. There's no fees. Now, look, there's an argument to be made that they're giving your data away and everybody's mass data to hedge funds who then can use it at their own risk. And if that works against them, well, meh. But now we're seeing what happens, right? Now we're seeing what happens. So I'm personally, I'm like a little bit upset about seeing what's happening here. And this is like, at first, this in my opinion started out, this wasn't the retail investor versus, the big bank versus the big institutional trader. I thought it was just a case of FOMO where the stocks started going up and everybody started buying. But if they start to actually fuck with Robinhood and fuck with people's ability to actually participate, then it's on. Then it's on. And I don't think that this is, because you got 2 million subscribers in Wall Street Bets. This is going to be a story that I think is just beginning. And they're going to have to do something about it because it's just like, people are buying up worthless securities and just manipulating them. By the way, I don't own any of it. I'm just watching this from the sidelines. So, but again, if you buy something because you think it's going to go up, and then other people buy it because they think it's going to go up, is that manipulation? If it is, then like you make a case, a lot of other stuff's manipulation. It's almost like in this case here, what we are experiencing is the Barry Bonds syndrome, right? Everybody in the mid 90s was on steroids, right? Everybody, Mark McGwire, Sammy Sosa, they had this big home run race. Barry Bonds, probably the best player in baseball prior to steroids becoming so popular, looking at these clowns, hitting all these home runs, going, fuck them. I'm better than them. I'm going to do it better. Barry Bonds comes along, has the greatest season that any baseball player can have in modern history. I'm talking, he had an on-base percentage above 600. I think he hit like 70 home runs. I don't remember the exact number. But the point is, he did it so damn well that he pissed everybody off. And that's what we're seeing here is Reddit. These Wall Street Bets have done such a good job creating awareness for the stock, pushing it higher, that they're starting to piss people off now. And we're going to get to see all the games that get played as a result of this. So let's see. And I hope that those who are participating don't just back down, because it's just another case of the large people in the system trying to work against them. So this is another case, guys. Do what you want with it, but make no mistake about it. They're coming for you. All right, enough of that. Let's talk about Fsd Pharma. What can you tell me here, Jay?
Fsd Pharma. So this is essentially a case of who knows. Fsd Pharma.
This is a Canadian former cannabis company turned NASDAQ. It's now like a biotech stock or something.
Yeah, they're doing some stuff with COVID. Their release had some stuff related to COVID, but they said that they don't expect a study to be done by the end of the year because of COVID restrictions. But yet this is a study on like a treatment for COVID, which boggles my mind, but it's classic FSD Pharma. It is what it is. I just ignored it because to me the big story was that President Zishan Saeed was fired for cause. Now the interesting part here is Zishan and Anthony Durkat, who are effectively majority shareholders of the company, they requested a special meeting of shareholders. So clearly they're trying to do something. The two of them collectively, because they own 48 Class A shares effectively have control of the vote for the company. Now, the current CEO, Raka Bashkari or something like that, also has 24 of these super voting shares, or multiple voting shares, sorry, but he's effectively outnumbered by these other two. So what it looks like is Zishan and Anthony called a special meeting of shareholders, and they're looking to boot off the entire board, restructure it, and one person that's going, or who's going to get the boot if they get their way, which they will because they own majority, is Raka. So Raka effectively said, "Fuck you, you're fired," but it doesn't mean anything because he's about to get the boot anyway.
Huge has raised a lot of money. They've never really accomplished much, as I understand it. They're now on the NASDAQ, and there's a lot of interest in all these small cap stocks. It's going to be really interesting to see what they're able to do with this listing now that they should be able to raise some real money. So this is a cannabis stock. Do you know what they're doing in biotech now? Like, were they phase 2 of some kind of coronavirus testing or something?
Yeah, so it's some type of coronavirus test. Before that, I think they were doing something with cannabinoids or something. Okay. Raka took the company in a different direction. They still have their Coburg facility that was supposed to be sold. It fell through. Looks like they're looking to sell it off yet again. Who knows where this is going to go now? But
this is about all the time I want to spend on Huge.
Exactly.
This was a huge amount of time to spend talking about a company. I've never been a big fan of the people involved. I think that this has been a case where, I from 2 cents to $1, and then it largely went all the way back down, and then they somehow got on the NASDAQ. Whenever I look at a company that's had a stock that's worked that well, that's raised a lot of money, and I look around and go, okay, what have they accomplished with that capital? And I'm unimpressed. And that's the case there. They now have a NASDAQ listing. That's a real thing. A lot of money going into small caps. They have another opportunity here. So in some ways, they have delivered for shareholders. So we'll see. Now we got Curt Marvis join us. Curt, can you hear us?
I can hear you loud and clear. How you guys doing this morning?
Doing fantastic now that you're here. I was just screaming. I was screaming at the camera there, Curt. I got a little worked up over all this GameStop stuff.
I know, it's crazy, right? It's crazy. Who goes to GameStop anymore?
Well, that's exactly it. Is we've got these businesses that don't make any sense. AMC, GameStop, and everybody ran in to short them. And then the Wall Street Bets Redditors figured out, hey, if we all work together and buy call options, the writer of said call options is going to have to start hedging, and it's going to force the underlying to go up. So it's like the fact that the business is on its way to bankruptcy and sucks that actually came to their advantage because all these shorts came in, which made it so that the Robinhooders and Redditors figured that they could work together to make a lot of money. So now the big question is, if you're, AMC or you are GameStop, do you work to go and raise money here and go clean up that balance sheet and then be much stronger for a post-COVID world, which hopefully there is such a thing.
Yeah, exactly. Let's hope that happens.
So Curt, you've been in Q Media for
a long time.
What was the beginning of Q Media? Was it 2012, 2013?
Yeah, the idea really came up in 2013. I had left Lionsgate and was kind of fascinated with what was going on in the world of short form video content. So yeah, I mean, it was really before, it was just as Facebook was starting to show video on its platform, Instagram was starting, Snap, I don't think had even begun yet. So yeah, certainly there was no TikTok or anything of that nature. So it was a while ago. 6 years in the digital world is it's like dinosaur years.
Mm-hmm. So the beginning, let's walk through Q, because I know now you guys are really starting to turn the corner. But let's start at the beginning here. So the idea was that you guys were going to create a platform that influencers could really leverage themselves, get on linear television, get larger distribution, and you guys would effectively work together with them, and you guys would handpick which influencers you wanted to work with, So it wasn't just like any influencer could sign up on the app. You guys would handpick them, get them on television. And at the time, you guys scored a contract with Sinclair Broadcasting, which has since dissolved. Was that sort of the original idea?
Yeah. I mean, look, the one thing that's true today more than ever is there's literally billions of pieces of video content that are uploaded across all these platforms every day. I mean, it's nuts. And so the idea behind it was just like a radio station doesn't play every song that's ever been written. They have playlists and they select what are the hottest songs that people want to listen to in whatever genre it is. Or a department store doesn't have every piece of clothing that's ever been, put together in history. They take the brands that people are interested in. It was all the same thing. It was like, look, there's got to be a business around curation and packaging of the best of this stuff under one brand and in one place. And that's what the idea was and largely still is.
Mm-hmm. So initially you were in 3 markets, US, sort of LA based. Was it Poland?
Initially it was bigger than that. I mean, I've said this, and this is kind of my standard thing, but I say we went 10 miles wide and 2 inches deep. I mean, we were in 35 countries at one point, and that was fantastic and made for a great press release. But actually executing against 35 different countries in terms of who the influencers are that those people are interested in terms of marketing, et cetera, is impossible. And that's really what led us to changing the whole thing. The US, through the Sinclair deal you mentioned, at one point in time was very important to us, but that kind of, fell apart for a variety of reasons I won't go into. But the bottom line is when we kind of re-looked at our business, we said there's 2 things that jump out above all else as being where there's huge opportunity. The first one was, per that slide you popped up a second ago, was in the influencer marketing business here in the US. And for anybody who is paying attention, influencer marketing is projected to be a $15 billion business in 2022 on a global basis. It's growing everywhere. Logarithmically. Obviously, people know through TikTok and Instagram how important these influencers are and how they're kind of the stars of the Gen Z and young millennial generation. So that business continues here in the US. It's got a really nice pipeline of business right now, and that's definitely important to us. And as you know, Steve, we've made the argument our market cap for our company could have been what it is today just based on our influencer business. The reason we don't talk a lot about that in terms of the public markets is the one that we've spent, 3 years now, 3.5 years building is India. And why India? Number one, obviously there's 1.3 billion people, but 650 million of those people are under the age of 25. There's a massive young population in India. Second thing is technology and mobile video consumption, short form video consumption, social media is massive there. The biggest territory in the world for Facebook is India in terms of numbers of users. The biggest territory in the world for WhatsApp is India. The second biggest territory in the world after the United States for Instagram is India. The biggest territory in the world for growth for TikTok before the government banned it was India. So this place is just, exploding with opportunities around what our concept is. And so when we decided to stop going 10 miles wide and 2 inches deep and flip that and say, let's go 2 inches wide and 10 miles deep, that was in the influencer marketing business here in the United States and in the India business in India. And part of what we've always imagined from really going all the way back to 2013 about what this business was all about was what we're executing on in India right now, which is creating a brand and a platform, mass distribution, platforms, all the mobile platforms, et cetera, and beyond everywhere with a curated selection of content. And people sometimes say to me, they go like, well, couldn't someone just go on YouTube and see that? And so couldn't someone just go on Instagram and see that? And they go there and see that? And I go, well, yeah, of course they could. But they'd sift through, there's 47 billion things that are on there. And YouTube to this day isn't good at their algorithm of sort of suggesting things. If I'm an old surfer from San Diego, so I like to watch surf videos on YouTube. Well, if you went on my YouTube channel right now, you'd think the only thing I'm interested in is surfing videos. Well, that's not the case. It's just that happens to be what I look at and what comes to me. So what we're about is we find the coolest stuff for you. We put it in front of you, and that's the business that we're building. And we think the brand opportunity underneath that to create a brand called the Q in India, if we succeed in that, then all bets are off on what the value of this business could ultimately be.
Okay, so let's walk our audience. They're kind of new. They don't really know the story that well. What does that platform look like? Who are you distributing, or what platforms are you distributing your content on in India?
Well, you threw up a great slide. I think it's the one that showed the 5 sort of stages of our business. Perfect. Okay. We are, the first thing we had to do, obviously, was build a product. What was the product? The product was a curated channel, because we operate as a linear channel, and a curated VOD list, meaning an on-demand selection of all those shows and content around underneath our brand, the Q India, of content. Well, that means you have to go out, you have to find it, you have to license it, you have to repackage it, you have to put it together, etc. So of the 3-year process we've been under, year 1, and that never ends. I mean, we're finding new shows and new content every single day. We have a team in India that's out scouring all the platforms in India looking for stuff. So that never ends. But the first thing is you had to create that. Then once we had that, we had this product called the Q. Then we would go to all these different distributors. We started, and what's counterintuitive is we started with television. Why TV? Well, the first reason is television is actually a growing business still in India. There's tens of thousands of people coming out of poverty, hundreds of thousands of people coming out of poverty and going into the lower middle and middle class in India every day. What's the first thing they do? They get a TV and a mobile phone. And so we saw that there was a huge opportunity around television because it's still a growing business there. The second one was less obvious. And I sometimes refer to our TV thing as our Trojan horse behind brand building, which is that all of these digital stars can't put their stuff on TV. The one platform that they can't get onto is television. I'm sure you guys would love to have a show that was on BNN, just so you could, or whatever it's called up there, the CNBC of Canada. Is it BNN?
BNN, yeah.
BNN, just because it's bragging rights to say, hey, we've got a TV show. You could well have more people watching your digitally distributed program, but it's just the bragging rights because there's limited shelf space. Not everybody can have a TV show. And so what's happened is we've attracted some of the best content people because they get to broadcast out to their social following and say, hey, watch my comedy show at 8:00 at night on Tata Sky, which would be like saying, Rogers. So on Thursday nights at 8:00, you can watch my show on Tata Sky. Well, that gives them the halo effect of, oh shit, this is special. I mean, there's a famous, I think she's Canadian originally, Lily Singh, Indian YouTuber. She has a TV show now on NBC in the United States. She gets more viewers for one post on YouTube than she gets in probably a friggin' month on the TV show. But the TV show is this gold standard thing that created a halo effect for her. So we use the television both to create a brand and also to get the best content because we can put these people onto TV. We take that same channel, that same content, and we deliver it over OTT platforms. What's an OTT platform? Well, the ones that everybody knows about now that are the most famous are the subscription platforms like Netflix and Disney Plus. But OTT means anything that's delivered over broadband. I mean, again, in Canada, it's Crave TV. It's anything that you can get by not being a subscriber to Rogers or Shaw or Bell, Fiber, or whatever, and you're just bringing it in on your smart TV or your laptop or whatever through either your broadband connection or your mobile connection. Well, India's got all these OTT providers. So we also distribute that channel on the major OTT platforms in India. MX Player, which has like 300 million monthly average unique users, Z5, Dish, Watcho, et cetera, et cetera. So we're on all these major OTT platforms. What's the third thing? Mobile. Mobile, you've got to get onto the mobile platforms and be on the place inside these mobile carriers where they're showing the stuff that's coming from Disney or from Sony or from Viacom or whoever. That's companies like Geo and Airtel Extreme, et cetera. So we built our distribution. And in a year ago, almost a year ago to the day was the last time I was in India. It was February of last year, right as COVID was hitting. And we closed our first big ad deal, or what we thought was going to be our first big ad deal, and we were off to the races. Well, COVID hit and the advertising markets, I mean, one of the myths of what's happened in the world over in 2020 was that viewership on all this stuff went up, but ad dollars plummeted. Because advertisers said, hey, we're going to pull this stuff. We're not going to advertise as much. We're not going to do this, because they were protecting themselves. So we had a big pullback on what was momentum right then. And we had to ride through the summer months into the fall on what was a shitty ad market in India. Well, that started to come back in Q4. And so Q4, we started to bubble back again. What was driving that for us? It was COVID kind of being accepted and vaccines coming, obviously, this quarter, et cetera. But it was also because during that time period, we focused on our product, and we got better and better shows, and we got better and better programming, and we got better and better at our product offering, and people started friggin' watching. And the only one that we're really measured on in a major way right now is television, because they have a system there called BARC, which stands for the Broadcast Audience Research Council, which is their equivalent of Nielsen ratings here in the US. And when we started on BARC for the first 10 weeks, we had a rating of 0.1, not 1.0, but 0.1, 1/10 of 1 point. We closed the year at 3.9. That's extraordinary growth. That's going from under 1 million people a week watching to over 25 million people a week watching. That's on television. Well, what's that done? That started to get us even more and better content. That started to get the OTT and mobile guys looking at us as a more important content partner. So this all feeds on itself, but it starts ironically and counterintuitively with the television presence. So 2021 is a big year for us about cementing our revenue stream in television, and then putting the underneath of that initially really on OTT, and then following that as time goes forward on mobile, because we all know that young kids, you know, where do they watch video? On their mobile phones. It's the same in India as it is anywhere else.
So I actually wanted to ask you about the BARC ratings, because it demonstrated the success you guys had throughout the year. But to clarify, OTT does not contribute to those ratings at all?
No, OTT has no relationship to BARC whatsoever. It's only television. So our audience growth that we've been reporting and pointing to is only TV. I mean, the other one that kind of blows my mind, I'll give you another example here of what's possible in India. We had made an announcement about an app called Chingari.
Oh, yeah.
Okay, it was exactly 2 weeks ago. Okay, exactly 2 weeks ago, we announced that we had 112,000 subscribers, and about 45 million views of Q branded content on the Chingari app. Okay. I'm looking at it right now, right here. Okay. We now have 157.6 subscribers. Okay. That's what, up 45,000 from 2 weeks ago. 45,000 new subscribers to our channel from 2 weeks ago. And our views are 76.8 million. We have had 30 million views of content on the Chingari platform in 2 weeks.
That is wild.
Wow.
Okay, so that just points to, and we haven't monetized one bit of this. There's no monetization. There's no monetization of this right now, because Chingari's not even really monetizing it yet. And so the thing is that this is all it's stepping stones. It's building the wall. And look, as you know, Steve, it's taken us friggin' longer than we wanted, and it's been painful. And COVID was a baseball bat to the friggin' kneecaps in the spring, and it was tough over the summer. Well, we stuck with it because we're tenacious dudes, and now 2021 is going to be a big year for us in both businesses, in India and influencer. But India obviously has huge focus because we've got huge momentum there right now. So now it's about turning momentum into money.
So you have this massive following on television, which is evidence based on the BARC ratings. And we know where you sit in comparison to your competitors. Are the competitors you typically list on your comparison chart also on I'm not going to say right, Chingaria,
yeah.
These OTT platforms and everything else, or is that something that you're unique in doing?
Yeah, OTT platforms, the answer is yes. And, as you guys would understand, the challenge on the OTT platforms, television in India is still got a massive channel selection on most of the platforms we're on. So call it, 500 or more channels that are on that grid that you're competing against. But 500 is actually a tiny number when you compare it with an OTT platform that might have 50,000 different things that you can choose. And so part of the challenge with the OTT guys is getting them to market and promote. It's like being on the homepage of a website. If you're on the homepage, still above the fold on Yahoo, you're going to get a hell of a lot more views than you are if you're on, 10 pages deep. And so part of what's working for us right now is getting visibility on those platforms as our brand grows and our viewership grows, and we walk in and we go, hey guys, you're not promoting us. Because they're, the Disneys and the Sonys and the Viacoms and all these big companies are spending money and doing all this stuff. We're walking in and going, hey, look at our viewership. Look what's happening here. You're our audience. You've got to promote us. So that's what's ongoing right now. The Chingari guys, we know them. Some of our people in India have personal relationships. They were coming out and trying to beat TikTok. They actually came to us originally and said, hey, you guys have got this cool channel. Can we promote it and put it on a Chingari? We're one of I think only 2 or 3 things in our sort of genre on Chingari. But it's proving that with, visibility there and what we're doing, it proves how explosive the growth can be. I mean, if we're doing, we're averaging, I guess now about 3 million views a day on Chingari of our content. Well, that's only growing. So it's going to be 5 million, then 10 million, then 20 million. Well, those start to become numbers that you can monetize.
Yeah. It's great hearing that you guys are having this success because, so often in microcaps and small caps, when a deal isn't working, everybody bails, right? And quite frankly, I'll be honest with you guys, we were in this stock, I think as about 1.5 years ago, and it was just I don't know if this is going to work. And then you just didn't give up. You kept going. And now it looks like it almost feels like when you went public, it made sense because you had, this US infrastructure set up, and then that ultimately didn't work. So then you almost had to go back to the startup phase and just focus on India. And now it's okay, this actually is kind of interesting as a public play because there's so much capital, and a lot of people don't know this, but there's a ton of capital flowing into the India media plays, which brings me to my next question for you, which is, if you did get the stock price up, obviously you're not going to do it here because you don't want to blow your cap structure, but are there any media companies or would it ever make sense as part of the strategy to acquire any content producers in India?
Yeah, I mean, look, the one of the advantages that we have, because we actually launched our first original show, well, pilot for our first original show in January, and it's doing really well. So we're going to put more. We're teeing up to do 7 or 8 more of them as we speak. It's a show called Kia Insta Bolta, which basically means what's happening on Instagram. So it's basically a clip show and a hosted clip show with Instagram stars of the coolest, funniest, craziest shit that happened, over the last couple of weeks on Instagram. And so what we're doing is we're starting to create some original content. I'm not going to say, I'll just say that the cost in India to produce a show like that are extremely low. I mean, they would blow your mind how little it costs us to create that original programming. So, it's number 4 actually on that slide you were showing, is to get and create our own special content. Well, we're doing that right now. And we're out actually looking for a brand sponsor for the Kia Insta Bolta show. We almost had a pretty well-known company that jumped on board and they weren't able to, but we believe we'll be successful at that. So I didn't quite answer your question about whether we're going to acquire people, but I think, the creation of sort of, things that you can only find on the Q India is something that we're definitely going to be doing going forward. I think in terms of media companies there, I mean, we have non-exclusive relationships with basically all the top YouTube, creator groups, et cetera, and we expect that to continue.
Yeah, the one that I found really interesting, and I'm going to try to find a clip here of them, the Pocket Aces. Yeah. When I was doing my research on Q Media, Pocket Aces it's kind of like a startup media company in India, and I think that there's even articles written about how these guys started out with like no money. They're now raising money at some pretty high valuations, where they're effectively just entrepreneurs that got after it. They built their own content, built their own like sitcoms and drama shows, and I think that they're now you guys are distributing some of their content.
Yeah.
So to me, like, I love when I see young entrepreneurs getting after it, and there's got to be more story. Like if it isn't Pocket Aces, like at this point. Like that's probably too big of a pill to swallow, but there's got to be opportunities out there.
For sure. I mean, look, this is, you guys know there's new digital stars that crop up every week, every month, whether they're, TikTokers here or Chingariers there. Yeah, I mean, we're all over that. We've got a whole team of people that are constantly scouring and looking for deals that we can do. And we believe we're also on a certain level a discovery platform, where we can break a star and bring them out, promote their TV show, get it onto the OTT things, promote it on Chingari, and find somebody who's a friggin', wacky chef, some 18-year-old kid who's cooking things that are really crazy and has got lots of, on-camera personality, and launch them on the Q India and make them our star, for sure.
Yeah, it's you can kind of see it here, but these guys are a partner. So how would you guys work with a Dice Media as somebody who distributes their content? Can you kind of walk us through sort of how that change works?
I mean, one of the things that we do with all content partners is work on a rev share basis. So basically, we're selling the ads, or our OTT or mobile partner is selling the ads with us, or in some cases, that OTT or mobile partner is selling the ads directly. And so we after we get our expenses and everything else, we have rev share deals with who the partners are. Obviously, the Dice Medias, the Pocket Aces that are more prominent have a better setup than somebody who's an unknown. But we're not paying up front for content. We don't do that. And the other thing that's critically important to our success and top line costs and bottom line success is that the content that we're acquiring, I mean, these people aren't getting, Game of Thrones money. This content's produced much more inexpensively, not just because it's India, but because it's digital content. I mean, YouTubers and TikTokers here are not producing things at the level that HBO and Disney Plus are doing. And so we feel like we're advantaged because we can still drive the same ad revenues, but we're not paying anywhere near the same amount for our content.
Okay, so let's talk forward looking here. We're talking Q Media, where December 31st, 2021, you come back on here before you go out and you party it up. And where you live in Santa Monica?
I live in near Beverly Hills.
Okay.
It's called Beverlywood. That's the neighborhood. You don't have enough money to buy the house you want in Beverly Hills.
This was a comment I actually made early on when I first looked at this. Is you guys have a lot of really big names associated with this company, like founders of Lionsgate and MTV.
Well, I mean, look, I like the fact that you referred to the Indian guys at Pocket Aces as young entrepreneurs. Obviously, I'm not a young entrepreneur. I'm an old entrepreneur. And I've been in the media business for a long time. So I know a lot of people and have a lot of great relationships with people. And at the same time, whether it's, somebody like, I don't know, I can't think of a name right now, but, Steve Jobs before he died, or even a Bill Gates today, or somebody like that. I mean, once an entrepreneur, always an entrepreneur in my mind. And it's sort of like, why did Jeff Bezos and Elon Musk get up in the morning to do what they do? It's because they love creating new things. So everybody that's on our board, who we've surrounded ourselves with, they may be older, but they're all still want to create new things. That's why these people are working with us.
So the one question I have to ask, what's hanging on your wall behind you?
Well, there's a Elvis Presley poster because I'm a big Elvis fan that I got in France many years ago. Those are all records. The gold thing right down there, that's the MTV Lifetime Achievement Award. That's when I I actually started my career as a wildlife filmmaker, believe it or not, but I won't go into that story. But in 1983, I started making music videos for MTV, and my partner Wayne Isham and I created, hundreds of music videos when MTV played music videos all day long, and Much Music played music videos all day long, and so we got a Lifetime Achievement Award because we worked with so many rock bands and we're still alive to talk about it. But trust me, that deserves a Lifetime Achievement Award. when you're working in the 80s with Motley Crue, Def Leppard, Bon Jovi, Ozzy Osbourne, not to mention, the Stones and Pink Floyd and Bryan Adams and Whitney Houston, survival is key.
So getting back to the question that I was going to ask, we sit down at the end of the year. How do we judge Curt Marvis's performance as CEO of Q Media?
I think you said 2021 or 2022?
2020, the end of this year. What does a successful year look like?
Yeah. Successful year for us means that we have dramatically increased our revenue in India, which is basically been next to nothing up till this point. So we've dramatically increased our revenue in India and gotten to cash flow break even on an operating basis in India. That's number one. Number two is that we've built increasingly and significantly growing viewership and an audience, a loyal audience across all three platforms, television, OTT, and mobile. And that we've begun to monetize the digital, meaning OTT and mobile channels in a real way heading into 2022. Those are the goals.
Okay. Well, let's wrap it up here. I appreciate you taking the time to join us, and Curt, I'm really, really happy to see this success. I know that there's been some pretty rough times to get here, and sometimes for micro cap investors, they know that these things don't always go to plan, and sometimes you got to pivot once, twice, three times, and then you finally hit it. But what's interesting, and I said this the first time I looked at this company, it was like a $5-6 million micro cap with all these huge names on the board. Don't give up. And looking at someone like yourself, who you've seen media play out, for decades as an experienced exec. Now you're using all that knowledge in a place like India. It's going to be really interesting. And now that you got a stock that's starting to work, I'm really excited to see some of the things that you're going to do as you continue to execute as an operator, but also look at this this segment that is just lots of investments flowing in. I think it's going to be an attractive space as you guys put more eyes on the Canadian junior investor in the space.
Yeah, it's interesting. I mean, I know you were doubting. I know you were skeptical is the word I should say, Steve, at the beginning. So I'm happy that we've been able to win you over, at least somewhat. But I was telling somebody yesterday, I was involved with Lionsgate beginning in 1999, a couple of years after they went public. Stock was languishing around $1.50. And the market cap was like 100 million, and everybody was just like, why the hell were we public? And that went on for years. And no one at Lionsgate at that time was really thinking, okay, we're going to be mentioned in the same breath as major studios like Disney, Sony, MGM, et cetera, et cetera. They just kept at it. I mean, the same two guys, John Feldheimer and Michael Burns, that I met in 1999 when they joined Disney, are the guys at the helm of, when they joined Lionsgate, are the guys at the helm of Lionsgate today, 22 years later. And so that's kind of just what I've seen. I've seen it happen. And sometimes it doesn't happen in 5 years, and no one imagined that company would be worth billions and billions of dollars like it is today. And we sit here and go, if we execute on what we want to execute on in India, stay tuned.
Mm-hmm. Well, it's exciting, and I congratulate you on all the recent success, but it looks like we're kind of just at, when you describe all these numbers, we're kind of at sort of an inflection point where, next time we have you on, things could look dramatically different from just even here. So
that's the idea.
Well, I'm excited and you said it. I was a skeptic, and now I'm starting to go. Curt clearly knows what he's doing. He's finally starting to hit his stride. And
I wouldn't go that far. I wouldn't say I know what I'm doing.
well, you got a team who knows what they're doing.
Exactly.
All
right, cool. Well, it's good. I love to see that you got the show going too. I know you guys have been working on this stuff for a while, so that's awesome.
It's kind of like there's a lot of drawovers to what we're doing here to even what Q Media does, which is like, you know, we're able to just host this live daily show using today's technologies, which would have, you know, never been available to us 5 years ago, and it's got to be scaring the hell out of big media.
I mean, look, you're financial influencers. That's what you are. You're financial influencers, and the more you gain an audience, the more influence you'll have. And you know, this whole thing with the GameStop that we were talking about at the beginning. I mean, I sit there and I go, what the hell does everybody think? You don't think these platforms like Reddit and Discord and Telegram and all this shit is important? It's critical. And you know, but it's not just about, you know, calling brokers anymore.
Mm-hmm. Yeah, well, it's different, and that's what a lot of people kind of miss of the, you know, the Canadian small cap junior investor, and even in the U.S. with, you know, access to Robinhood, is people don't have stockbrokers anymore. Like you talk to a millennial, they don't have a broker who calls them up and pitches them ideas. Those days are gone. Yeah. And so how do people find out about what stocks they want to buy? It's through, you know, social media, and that's not going away. And we're getting glimpses of it now that is scaring the hell out of the big institutions and the regulators.
Yeah, I mean, look, I call it social video, and social video is the way of the world now. What you see on the video and what's told you by your peer group or community or people you trust, that's what you're going to go do. That's what our business is largely based on.
Yeah. Well, it's interesting how the world's changing, and I'm very, very interested to see how things go for you guys, and I'd like to have you back on just to talk more about sort of your history with MTV and Lionsgate, which is a whole nother conversation. And I know you've got a million just stories that are just our audience would love to hear about. So thanks so much for joining us today, Curt. I really appreciate it.
Good to see you, Steve. Thanks, guys. Appreciate it. Bye-bye.
Okay, so I guess that wraps it up. Thanks everybody who joined us. It was a pretty interesting show. I got a little heated there talking about GameStop. Little disclaimer here: nothing on the show is intended to be financial advice. This is for discussion and informational purposes only. If you do need financial advice, I highly recommend that you go talk to a licensed financial advisor. But again, nothing we talk about here is a buy or sell recommendation. We got lots of great news coming up for you guys on the dive today. Make sure to check it out, and we will see you guys tomorrow. My buddy Kevin Shea, who's a very well-known microcap investor in the U.S., talks like Jack Armstrong from New England. One of my favorite people is going to be joining us, so that'll be a fun show. So make sure to tune in tomorrow, and we'll be bringing you some more Canadian small cap coverage. All right, thanks, everybody.